So congratulations, you've decided to apply for a mortgage. Well, here are 7 things not to do after you apply for a mortgage. In general, before you make any large purchases or move your money around or make any life decisions, consult your loan officer who can definitely help you navigate how those changes will affect your potential mortgage. Number 1, don't change jobs or the way you're paid at work. Your loan officer needs to be able to track your annual income and how it comes in. So now is not a good time to change from salary to commission or to change job titles if it's something that can be postponed until the mortgage process is complete. Number 2, don't deposit cash into your bank accounts. The reason is lenders need to track where sources of money are coming from, and cash isn't really traceable. Definitely contact your loan officer if you've got an amount of cash that you need to deposit into one of your accounts. Number 3, don't make large purchases like cars or even furniture or appliances for your new home. This is one thing that people forget about when they get excited. The reason is new debt means new monthly obligations. And if your debt to income ratios change, you may no longer qualify for an amount you previously did. So wait for those additional purchases until after your loan has already closed. Number 4, don't co-sign loans for others during this time. Even though you're not going to be the number 1 person on hook for making the payments, your lender will have to take into account the additional debt that you might have to pay. Number 5, don't change bank accounts. Lenders need to source and track assets. If you change bank accounts, that makes the task significantly more difficult. So talk to your loan officer before doing that. 6, don't apply for new credit. When you apply for new credit, your credit score takes a hit. When your credit score decreases, this could mean 2 things: being denied for the loan in its entirety or getting a higher interest rate. So this is another thing that you want to wait on until after your loan closes. 7, don't close any credit accounts. What? I know that's a surprise. Many clients believe that having less available credit makes them a better risk, but it's actually the opposite. Closing a credit card or a line of credit that you've had for a long time decreases your credit history and the length and depth of your credit history. Therefore, you'll want to wait on this as well, or at least talk to your qualified loan officer before you go through with it. In sum, any change in your income, assets, or credit should be reviewed with your loan officer in advance if possible to make sure that your mortgage approval process is as smooth as possible. If you have any questions about mortgages or the home buying process, feel free to reach out to me.